All right. Well, hey, look, again, thank you so much for dropping by and things today. Really appreciate it. Do you, just for the people who aren't super familiar with this, do you want to give them a real quick rundown, just specifically about how you are tied into Ravencoin, a little bit of your history, perhaps?
Sure, absolutely. So I'm a developer, kind of an entrepreneur, and have an MBA, computer science degree. I was an entrepreneur for most of my life. Started a few companies, sold those, and then I did a kind of a crypto startup, and then sold that so I could go work for T0, which is Overstock's.
Right.
Working on being able to trade securities tokens rather, and then I left there for a short time. Went to work for a company out of called ANX out of Hong Kong, and then went back to Overstock as part of Medici Ventures, which is actually the venture firm that owns portions of about 22 other crypto companies. And invest in crypto companies. So I'm a principal developer for Medici Ventures. And then along the way, I got wind of a project that Bruce Fenton was working on and that Patrick wanted to help with. And that was what I really wanted to work on. So that was Ravencoin. So that's kind of how it got started.
Cool.
And so Medici Ventures, not really a Medici Ventures portfolio company, but Medici Ventures kind of allows developers, myself included, and some others, to work on Ravencoin. And it started out as an open source project. Still, of course, it's an open source project. It started out as a code fork of Bitcoin.
Mm-hmm.
And then once we had that running and operating as Raven, RVN, the token, so working like Bitcoin, but higher issuance and faster blocks and a little bit larger blocks and things like that. The plan was, and we've implemented this already, was build a token platform. So a little bit, if you're familiar with Mastercoin or Open Assets or Counterparty, kind of building that in together with it. So instead of being like a second layer separate and independent from, it's integrated into RavenD, right? So the ability to create your own tokens and issue your own, and you can issue from 1 to 21 billion, and you can attach metadata through IPFS. So we got that working and operating and launched. Upgraded on November 5th of last year.
Cool.
And then since then, we've been working on some other, what we call restricted assets, tags and restricted assets. And that's a tool set to allow some of the requirements that came out after 2017. So ICOs were issuing on like ERC20, but they started having to modify a bunch of these ERC20 contracts to be able to do whitelisting and the ability to seize and a bunch of things like that. So we took kind of the best of those things and then kind of built tags and restricted assets, which is the ability to issue assets where the issuer has a little bit more control.
Right.
And it's really for legal reasons. All the other assets, they work exactly the same, right? They're more like Bitcoin. Sure. You can't stop them. You issue them, you send them out, they move around. The restricted assets are a little bit more in the issuer's control, and that's for legal reasons.
Right.
That's really where we're at now. We have that on testnet, and that should launch next month.
Nice. That's very cool. I mean, it sounds like you've certainly been really quite busy. What you mentioned it started off as a fork of Bitcoin, open source project. Anybody can contribute. How have you found I suppose the development process without any kind of a central hit or like a larger ICO? How has that affected Ravencoin in terms of the progression there?
Yeah, so there's pros and cons. The main pro is that it was super clean from a kind of a legal or regulatory perspective, right? So some of these other projects, they still have legal we'll call it regulatory overhang, meaning they raised money, they may have violated the Howey test, and therefore we're raising money, kind of illegal in the, from the U.S. perspective. Yep. Of course, a lot of this stuff is jurisdiction agnostic, right? It doesn't care where it's launched from, right? It's running everywhere. But you still have an SEC kind of going, hey, you were selling to U.S. people and things like that. So there's kind of a problem there. Bruce is very aware of these rules and things before he was, kind of in that space, stockbroker and stuff for most of his life. So he understood those. And so that's the pro, is that it's like super clean. We didn't raise any money, and it was backed by Medici Ventures, which was fine. And it was great, actually, and super helpful from that perspective. That's the biggest pro. The con comes from, the downside. It comes from not having like a big budget where we've got a bucket of, tokens or money to be able to say, hey, let's, we want to talk about this. And so people come to us and say, hey, we'll run your marketing program. And it's like, great, there's no money for that. And they're like, oh, well, never mind, and they walk away. And that happens like every day, right? They come into the chat room. Who's your marketing department? It's like, yeah, we don't have one of those. So, so that sometimes has like hamstrung us a little bit. On the other hand, from that has come just this amazing community that's done a lot of this, just built second tier tools and have done moderating, and we don't run the Discord or the Telegram or anything like that. Other people have just picked up on that and done it, and just amazing people. So,
right, the grassroots movement.
Yeah, and it's been incredible. So it has that's been a pro, right? Is the people that are in it are not in it because they're collecting money from your coin. They're in it because they love it, and that's been awesome. Yeah.
So, I mean, speaking of regulatory, like the framework and things, one of the things that's kind of come up, I suppose, in my investigation of this, is that a lot of people are really keen on the idea, for example, of like buying into shares of a business or shares of a house, like a property, for example, and getting dividends from the rental payments and things like that. But one of the big problems is government and the laws around that.
Yeah. Agreed. That's the biggest problem. And I mean, we have lawyers and whatnot, and I've worked with a ton of them. And it really is a problem. Enough so that kind of what my role has kind of morphed a little bit into, I'm definitely not a lawyer, but kind of like finding a legal pathway to do this. And some of these laws that were created, back in 1933 and updated because of the Patriot Act and updated in 1988 for accredited investor rules. And these things, they're incredibly crazy to navigate. They're fine for, like a Schwab, right? That they've got, oh yeah, we need to KYC all these people, and they have this structure. Once they get you as a customer, right, they can keep, kind of watching you as a customer and reporting what you do as a customer and everything to the government and all that kind of stuff. That's fine for a Schwab. For a decentralized project, how is that supposed to work? And so navigating this has been tricky, and it's not. I mean, it's a combination of rules. I mean, it's a combination of like the SEC issuance rules. It's a combination of SEC, the 1940 Act, which is more about like the trading, of securities. And then it's updated rules that happened after 9/11, kind of in an environment of fear that are still there, that are just like, oh, we need to know what everybody sends everywhere and things like that. It's all these things and interacting in crazy ways. And so some of what I've been doing is just sort of educating on a potential pathway.
Right.
And so there's a Medium article that I've written recently kind of about this. And I think it would work. But again, I'm not a lawyer, but, I'm kind of like involved in lots of different areas and lawyers, on each of these different aspects, on the AML, KYC, OFAC, and that's we need to know who you are. And then there's the stuff on the trading, which is like, okay, you have to have a license to trade these things, but then there's reporting requirements for that. And then there's issuance requirements. And the issuance requirements, right, say, you're going to have to issue only to accredited investors, which means they have to be wealthy, or you have to run under an exemption like a Reg A+, which means you still have to take your disclosure rules and get those approved by the SEC. So there's all these like things that are kind of interacting and make it tricky. And I think because of that, there's a pretty good chance that some of the other countries, I think, that just say, you know what, as long as you don't talk to the U.S. people, we can actually, raise money and start projects and do this kind of thing. I think that may happen until the SEC kind of figures it out. I think they're starting to. They just barely did a proposal that said we need to adjust the accredited investor rules to allow education instead of just wealth. Accredited investor rules, if they open that up to education, and that's in discussion right now, or I guess comments at the SEC. So if you want to comment on that, I sent over my article about the. I had suggested this earlier back in November, and so I kind of just sent that over there. I don't know if it'll actually make it in comments or not, but I sent it over to them because I think that's a great idea. It opens it up. You maybe don't want people who are kind of like ignorant of the risks of trading to trade, but someone who's at least read something and taken a small test or something that says, yes, I understand it's risky and why it's risky, right? There's maybe these people aren't doing good accounting. Maybe it's just a bad business. Maybe it's, there's risk from just like flat out fraud, but there's just lots and lots of risk in just entrepreneurial businesses that just fail just because maybe it's a horrible idea or they don't execute well or they're not the right managers, whatever, right? There's lots of reasons.
Yeah, and that
but I
happens
think if someone understands that, absolutely. And these rules are really for out of crypto. I mean, for the last 80 years, crypto didn't exist, and these rules have existed where it's like you can invest as long as you're, as long as you have $1 million of net worth or whatever. And there was actually one of the Roisman, I think his last name. Basically, he's in the SEC. He's one of the commissioners that votes on these things, and he said, "I can't invest." Right in his comment, he said, "I'm not allowed to invest because I don't meet the wealth bar."
Wow.
Right. So this is the person making the decision on these things, and he's not allowed to invest, which is just insane to me.
Yeah.
So the fact that they're talking about opening this up to people who have, and they gave, I think, 3 tests. I think it was Series 7, Series, I want to say 65 and 82. And so anybody who's passed those tests, Series 7 is really tough and you have to be sponsored, but I think Series 65, I think, is for like being an investment advisor or something like that. And so that one, it's a big book and things like that in the test. And then they said maybe an accredited thing. So I think they just want to make sure it's not anybody's test, right? It has to be a test that hits a certain bar. I think it's a great idea. I mean, at least opens it up. If you're willing to put in the time to learn, you can get started, right? And so someone who, and that may get someone started on, investing well and then making it past this wealth, this arbitrary wealth bar. So, anyway, I think that's fantastic that they're opening that up. I think that's just one of the steps they need to take. I think one of the other steps is there's a limit of like 2,000, right? So you just have like this limit of 2,000. Well, that may have made sense when everybody was like recorded with a quill pen and things like that. That probably seemed like a large number. Nowadays, when a crypto thing could easily track a million holders with no problem at all. And really with other than the cost of moving it, which is fees that are paid by the traders or the issuer, it's and immutable and visible to everybody at how many and things like that. I think they should just kind of eliminate that number, that arbitrary number.
And the cost of updating that record is basically nothing, and it's, as you say, everybody's public. Yep.
Yeah. So I think that's kind of an outdated thing. I don't know why somewhat arbitrary number, right? It's like an even number, right? 2,000, right? Somebody made that up at some point in time, and it just seems super arbitrary, like the $1 million wealth number. It's like, oh, well, let's just make it an even 1 million, right? I mean, who decided that, right? So I think they should change that one as well.
I mean, I suppose they probably made a bit of sense, at least back in the day, like you say, sometimes even in the early 1900s when they wrote these laws. But you look at it now, and times are changing.
Yep.
One of the other things, like you mentioned AML and KYC and the requirements around that and things, but if you have a bunch of miners, when they mint coins, obviously there's no AML, no KYC. The users are effectively pseudo-anonymous until they go and they start then spending those coins wherever, for example. But what are your thoughts around like not so much like the implications, but I suppose the benefit of having that kind of like GPU mining and allowing people to participate without having to go through those kind of KYC and AML steps?
Yeah, so I think that we need to split this into like maybe 3 categories, and I think our regulators are starting to figure this out. I mean, they're 8 years behind the times or whatever, but they're starting to figure it out. that there's different types of tokens.
Yes.
One type, which is cryptocurrency, is more like a commodity, meaning the only price that it has is just a market-based price. I mean, that might be set initially like in a chat room, but ultimately it's probably on an exchange of some sort, crypto exchange, and it's just buys and sells. So it's like corn or orange juice or something like that, right? It's just a commodity,
Yep.
and it's whatever somebody willing to sell it for and whatever. And behind that, there's nobody that has to do anything to make that valuable, right? There's nobody who has to do accounting for it, right? There's nobody that has to keep a company running. There's no humans behind it that are responsible for something that if they walked away, that the thing goes to zero, right? So that would include RVN, Raven, right? But it would include Litecoin and Bitcoin Cash and all the different tokens. That if basically if the people behind that walked away, it would continue running, right? I mean, someone else would maybe pick up the code, but they wouldn't even have to, right? It just keeps running. So that's one type, and that's really more like a commodity. And so they are talking about making that more regulated by the CFTC. Mm-hmm. Although I talked to one of the guys from the CFTC, just a sheer random thing. It was actually in a cruise, and you're in New Zealand. It was actually a New Zealand cruise. And so it was a small fraction of Americans, but the guy I sat down next to was an attorney from the CFTC. Anyway, he basically said CFTC rules are all related to warehousing and basically getting the farmers paid back. If something happens to this warehouse full of corn, they need to be paid back in 24 hours. And the rules are probably mostly written by farmers, but they're like, we don't know how to deal with this, right? There is no warehouse of corn or whatever. How do we get something goes wrong? Anyway, it was a super interesting conversation. But basically, that's the CFTC.
Right.
The other category is we'll call them utility tokens, where it's basically almost like a prepaid gift card or a Chuck E. Cheese token that's intended to operate a machine. And so that might be something like once it's operating, and I think it's in testnet now, but like Filecoin or Siacoin or what's the other one? Mainframe. Things where the token is intended to basically kind of purchase compute power or disk space or something like that. So it's almost like a prepaid. It has a value, but it's basically to operate this distributed system, right? So that's a different category. And then the category that we're kind of involved in now or at least talking about, is the security token. And in the case of the security token, that token is representative of like a business or a building that can earn money or something like that, where there has to be humans to make that work, right? So you could say if it was just a fraction of let's say something that just sat there and kind of could gain in value just because it's a rare item, an art or something like that, then it might not fall into this category. But if it's something where it's like let's say a building that you're going to rent it, right, and triple net lease or whatever, and so people are going to pay money to be in the building, and then those profits maybe need to get distributed back out to the holders, which Raven can do, right? Yep, and well, so for rent or for selling the building, either one. But you could pay out back through the crypto address, right? Even the token was held in a Raven address, you could pay them via Raven back out that address. That's sort of our dividends reward system. But there are humans behind that. So if the humans collected a whole bunch of money for this building and said, hey, we're going to rent it, and then they walked away, right? Then everybody's kind of out because this building wouldn't make any money, right? It would, deteriorate or whatever. And the same thing for a company, right? This is going to be a share of this company that makes widgets, and you're a fractional owner and things like that. But then these guys are really kind of just fraudsters, and then they just walk away. That's really where these rules come from, because there's a lot more risk in that sense. Yeah. Where you want to know who's behind it, what their plan is, that they're actually doing accurate accounting, that they're things like that, right? So no, I wouldn't go as, I think there should be categories which would be nice. And by categories, I mean there's fully registered business. That's like the Apples and the Microsofts and whatever, and they're trading on NASDAQ and whatever. And then there's the kind of the Reg B, which is they basically have to fill out a form, and then they can only sell to accredited investors. And then there's a Reg A plus where they have to like do disclosures and get those kind of approved through the SEC, and people are kind of in line for that. But those are kind of getting kind of slow walked, I think, for whatever reason. So if there is different categories, then if you just know the risk of kind of each category, you can say, oh, this one we don't know what their accounting records are and things like that. So this one's kind of really risky, and this one over here they have to publish quarterly what their accounting is, and they go to jail if they're doing phony accounting or whatever. And then you have kind of these classes of things that you can invest in, and you can just kind of decide from there where the risk is. And I think that's really where we should get to. And then the education part of that is knowing what type of class you're investing in, so that you kind of know, oh yeah, these guys, if they don't have their accounting done by certified accountants, then they could be ripping me off. But at the same time, you're like, I know these guys, right? This is their third successful project, and I'm willing to take that risk.
Yeah, they've built up
and
history.
letting the individual just Yep, exactly. And I also think it would be nice if we had effectively like a Yelp or a eBay ratings for these things, right? Where it's like, hey, there's a whole bunch of people weighing in, and then you could kind of weigh in, people could weigh in and say, hey, these are the guys that ripped me off last year or whatever, or these guys are like on their third successful project, everything they touch turns to gold or whatever. And then you could kind of make an informed decision, right? Based on kind of crowd-funded information, or crowdsourced information, rather.
That sounds like a great idea, though.
Yeah. So those are the types of things I'd like to see. They may happen sooner in other countries, just because we're kind of coming from meaning in the U.S. We're kind of coming from maybe a different perspective based on rules that are somewhat outdated. But eventually, there'll be pockets, and people can see what works and what doesn't. Yeah,
that sounds like a great idea. Hey, look, so I understand that you were a little bit pressed for time. I've got one more question I'd love for you to answer. What is your favorite kind of an asset, even if you're not naming the name? So what is your favorite type of asset that you've seen spun up on Ravencoin?
Oh, that's a great question. So,
sorry to put you on the spot here, and
yeah, I'm gonna pick two. That's all right.
Sure.
So what? So I think Ravencoin's really good at doing unique assets, and those are like more of a certificate of authenticity. So the name is guaranteed unique. It can be sent with the artwork, or signed football, or signed collectible, etc. And it basically represents that it was originated by the person that created it, by Disney or Nike or this artist or something like that. And so there's these glass tokens that are very super unique, and they're putting this certificate of authenticity that goes with it, right? So everyone has a unique name, and they can put, with that unique name, they can put the photograph of that asset or that item, and then the token kind of transfers with it. So if somebody bought it, you transfer that certificate of authenticity with it. And then you kind of know that this item can't be counterfeited, right? If somebody says, hey, those are selling for a ton because there's only 100 of them, and then somebody in China tries to make them, they don't come with that certificate of authenticity. So it kind of gives a root level of trust to something that's physical. So you can't counterfeit it. So I really like those. The other one that I think is being done on Ravencoin right now is Equistart. And it's basically taking and using Ravencoin as your cap table initially, right? So right out of the gate, beginning, maybe there's 3 founders, and they each own a third of the company. And so you basically issue the shares or the tokens, and then each of them get the third. And then you have like this perfect public cap table, your shares, of who owns them, right out of the gate. And I think that is what transitions over time into the ability to, the one guy who's the founder and the company starts getting bigger, he can start selling them to, potentially sell them to somebody else. Although the framework needs to be so that the company gets kind of first right of refusal. And so those rules and things are being done by them as well, right? So if the other founders say, hey, this is okay if you sell these other shares and we don't buy them back, that's fine. And then eventually that can kind of move into the shares from day one become tokenized shares, and that can eventually move into, once we get the trading of this back out into, working a lot like finance, right? Where it's like, okay, these shares have been sold and now they can be sold to others,
right,
and people can own, a small fraction of a company. And it kind of gets away from kind of maybe like an Uber or some of one of these companies that never goes, or they did, but weren't going public, where it kind of slowly goes public instead of going like in this big one event where basically all these people have kind of gotten wealthy because they knew people at the they knew people.
Yeah. They got in early because they knew someone who knew someone.
Exactly. So it becomes more democratized, right? So that other people can join in, and they may be able to join in at $100 instead of having to join in at like $1 million, right? And so it allows kind of a different level of investment. Yeah. So I kind of like that as a starting point that ultimately may become kind of the way things get traded in the future. So those are the two.
Very cool. I love it. Hey, look, I want to thank you so much for taking your time out of your day today to come on and have a bit of a chat with me. Really appreciate your time. It's awesome to see some of the cool things that Ravencoin are doing, and I really appreciate the trailblazing that you're doing there as well when it comes to the legalese and talking with those regulators and things. So thank you so much. Really appreciate everything.
Well, thank you. It's been awesome chatting with you. I really appreciate it.
Not a problem.
Great.
Have a great day then. Thank you, sir. Appreciate your time.
All right, you too. Bye-bye.
Cheers.